Good afternoon, everybody. It is Friday, January 24th, 2025. It's always weird when I don't have Rocco to start. He's upstairs doing whatever. Yeah, interesting day in the markets today. Super low volume, reminiscent of holiday trading. I know sometimes we often say that, but it's kind of what you want to see. SPY did put in a new all-time high today. Nice slow creep. We were lower, super low volume. Like I said, holiday type, July 4, Thanksgiving, Christmas, very low volume through SPY. Today was really a China and utilities day. We'll show the screen, show you what I mean. And then oil and gas and semis, they reversed. SMH did drop, but you did get new all-time highs for SPY, XLK, XLG, all your the large tech funds. So here we go. Let's zoom in here. And then we'll tell you what their week was about too. So again, today, China utilities rallied while oil and gas, through measures through the XOP ETF and semis, both down about 1.7% or so. New all-time highs for the S&P 500 through SPY, XLK, and XLG, which is top 50 in my favorite fund. And then the week, when all said and done, was really measured in strong gains in biotech and uranium. They came back, and we'll take a look at the charts, and a 9% decline for nat gas. That one continues to go lower. We'll take a look. Without further ado, let's go into the intraday chart first. Memento por favor. Go Birds. Huge game on Sunday. Let's go. Boopity, 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 bob. Okay, first intraday action. Here, a look at the single movers. So NVIDIA, bad move, down 3%, not so great. Tesla, which I'm long, was looking to exit today, but it reversed, so I am still in it. That was down 1.5% or so today. Meta bucked the trend to new all-time highs, up 1.7. MicroStrategy down 5. Bitcoin had a bit of a volatile day. Broadcom up 1.8. Google up 1.1, and Twilio up a massive 20%. And we'll just let me see here. Take a look at where Bitcoin is, 105 right here. So real fast, intraday, yeah, so we peaked right at the open. They actually were selling it right then. So we peaked at 611, and nearly 611 print of SPY was at pretty much the opening bell at 9:30. And then pretty ugly, I mean, I don't want to say ugly trading, but they were continuing to be sellers. Till 11:30, we actually got above VWAP for just a breath of air, essentially. And then we continued to go lower and towards 3:30, 4 o'clock. They were selling it, towards the lows of the day. So S&P closes down about 30 bips. Your worst index, from the majors was IWM down 55, and the Dow actually reversed the trend up 25 bips. As I zoom out for that SPY, what we see going forward, this is pretty much great action here. We thought it was going to get tired. Honestly, so I was going back and forth. We were looking at this, and we thought this was a bottom here at 575, and it would not pierce that. I thought that was great support, especially after we filled the election gap. And now we've rocketed back in just 11 days from 525 to 607. So now what? Essentially, my target is right here. I'm looking at my calculations right around 613. So, I mean, today was an all-time high. So we're basically seeing more of the same, but just a little bit more of a push towards about, like I said, 612, 613, which from here is, $5 or $6 away, less than 1%. So, yeah, not a ton of more upside in the short term. We have had an extraordinary run. So I see that peaking around, like I said, 610 to 615, and then a mean reversion to about the 595 level over the next, couple of weeks. So we're ending to, in my opinion, the end of the accumulation phase that started right around here on the 13th. All righty. So that's my call on SPY. So again, leaning bias upward. Wouldn't exactly chase it up here. You saw how quickly they rejected it today at 611 and sent it right back down. So let's me kind of know what we're leaning in, and let's see what assets we're really moving this week to kind of confirm or deny this move. Alrighty, so let's take a look at what really was moving today. Like I said, a low volume day. We'll take a look at what happened today, and then we'll zoom out for the week. So today, a big mover. Also, I was on All-Star Charts yesterday, the morning show, and we're talking about this. FXI getting in a position here. It actually had a nice bounce today, up 2.5%. So on this one, I don't want to let me pull up the chart here on another time frame. So this was similar to the SPY here in terms of the bottom that for them, same almost principle on terms of the 13th. This rally started at 28.65 essentially. We rocketed all the way back to nearly 31.5. My target for this, very similar to S&P, as I saw another 2% of upside. Similar to this, I see this going to about just 1% or so more upside to about 31.55 or so, and then a mean reversion to about 30.20. This looks like it's about close in by Monday towards the end of its accumulation phase from a nice rally that it's had, confirming its bull regime here. So this was really tested. Got a little bit concerned, saying, FXI, not really sure, but there's actually really no reason to doubt this chart. Sure, the 52-week high is 3 months and a half removed now, but with these technicals, a rising 200 moving average, RSI I don't love. Want to see where this peters out. It could be putting in a lower highs here, range bound, and then an explosion with a more animal spirits in a global rally. But I would stay long. We're going to log this is actually one of your best trades of the past year. So I want something like this to win to my back. So I will be looking for a long opportunity in this. But to be frank, like I said, in terms of the cycles, this probably comes for a buy around February 10th. So more to come on that. But a big update, up 2.5%. The XLU, this had a nice day too. Up 1% for utilities is kind of a big move. So let's see here on the growth chart. So yeah, this is also like I said, the market bottom. You see it in many parts on the 13th. This is a great asset. This is one of the best sectors of 2024. It just barely touched its 200 moving average on the 13th, and that has rocketed from $74 to $79. Like I said, that's a big move for utilities. It's been a good place to be in. I think this moves towards about 77.5 in the next 2 weeks. So I don't want to chase this. Like I said, getting vibes now, a bunch of things. Obviously, this is a little bit defensive, but we'll look at the other charts as well. But it looks like markets are just obviously not running out of steam. Not saying that, but they're going to hit a little bit of a head here, I think, and take a little bit of a breather. I see a bunch of distribution phases starting, middle-ish of next week. So that's utilities, a big move today. Wouldn't chase it. Might have a very tiny bit more to go towards 80, another 50 cents to get towards these highs of this week. But after that, I do see it moving to about 77.5 or so in the next 2 or 3 weeks. Let's look at the losers today. XOP, we talked about this one, going to be frustrating. This one down 1.3%. It clipped under its 200 moving average just today. So again, we're only covering things that really are market moving and really having different kind of relationship changes with multiple standard deviation moves. So down 1.4, this is a big one. A big move for it, all things considered. This group peaked in April. 200 moving average really has been just kind of a brick wall until right around mid to late December when you got these oversold readings, and then it started to clip lower and then had a sharp rally here to funny enough, when the S&P market type stocks bottomed on the 13th, this continued going higher for about 3-4 days, and now it's going lower. So I do not like this group. First stop around 139, 140. So a nice descent. I mean, again, this thing was 147 a week ago. So when the 200-day moving average is at 141, I think this continues to go lower the next 2 weeks to about 134 or so. And that's when I think the bleeding potentially stops. But I think also this does not have a great next 2-3 weeks ahead of it. So we'll see. The market has done a lot. Let's look at the most important chart in the market, one of the absolute most important. And of course, there's big earnings next week. Microsoft and Apple are next week. So next week's really the major week that folks focus on. So SMH, what we have been clamoring for is that the old resistance becomes the new support. I'm hoping that happens. So that would basically imply that 261 essentially is our new floor. We went as high 2 days ago. We got all the way to 270, and now it did touch all the way to 261. Basically, we almost closed at the lows. Tough group to look at right here. Obviously, without long, this may have a little bit more to go upside towards about 268. I'm curious. I think it may have another jump to tangle here to get towards 268 or so. And then I do think it reverses and potentially goes as low as, I think it probably goes towards potentially 255. We'll see where the love is for this group. So I want to see if that 261 holds and what next week's trading brings, specifically for the SMA. So interesting point. So big stuff happened this week, breaking 5-month highs there, 6-month highs, and getting to that above 263, and then we closed above that level today. So we still have the case for old resistance being support. Let's see. Top 3 gainers of the past 5 days, no repeating charts. So we looked at this one. This would have been in fashion ARKG. So ARKG is the actual biggest gainer this week in ETF land. This is correlated with your Biotech, XBI, IBB. We had said, I think we said before, we like this group, like the accumulation phase will continue, but to about 2770 or so. So this rally for this started around, middle of last week. around the 13th, 14th, pretty similar with the market. This thing's gone from 24 to 27. This thing moves, pretty much almost on average 10% a week or so. Today was up 12, or this week 12% in the past week, down 1 2/3 today. Still don't hate this group right here. I think this oscillates and moves, kind of sideways for the next 1 to 2 weeks, but still an upward bias going to about 27.70. So I think it wants to tango with these, highs that they've had since July, essentially. And then after that, I would think a mean reversion brings it to about 25, but that 200-day moving average should, if things, stay the same, all things considered, this should start to flatten, stabilize, and start to build a base, kind of like what we saw with nat gas, foreshadowing. We'll take a look at that chart in a bit. So that's what I think is happening here. The 200-day is still sliding lower. It is still a risky area. But I do see there's potential for this group. Uranium almost just as much this week, up 11%. Big gains. These were the biggest gainers this week, and this was also down 1.5% today. This 200-day moving average, like a brick wall, right here, stuck essentially at 29.20. Similar. I like this. I got a question here. Thank you for putting that in. I'll take a look at the end. Question on Apple. Sure, I'll take a look at that. Was close to chasing that yesterday. We'll take a look at what it did today and a forecast for it. Thanks for that. Uranium. I still think this potentially. My target for this is 30.55. So I'll just say that to start. So it's done a lot. This move started from on the 13th, also 11 days ago, from $26, $27 all the way to 31. So a massive mover. Like this with about a 30.55 target. So it's kind of at target. And then to the downside, I still see this being a little bit frustrating for folks. This one I see going under the 200-day, within a month's time or so. So these are extra frustrating trades. You try to stabilize, spend time above and below. That's typically what happens when you get overbought conditions 3 months ago. And then 1 month ago you get oversold. And that's pretty much how you go from 52-week high to under the 200-day moving average. So as messy as you think. And then the next one, KWEB, a very strong week for KWEB and China. Part of it was today, up 3.7%. So this was part of the group, right? So the 13th, this group bottomed at 27.30, and now we've hit 30.55. Can't ignore China. There definitely is a part of a momentum in this portfolio, and it's working. Specifically for KWEB, it looks like my target for this was right about 30.35. So it's right about there. I don't really want to chase it right here. I want to see how the next, I think this will get discounted. This has a hard fall too at times with a 70-cent average true range. So this thing moves quite a bit. So I see this being a mean reversion move down to about as low as 29.20 over the next month or so. So I'm going to be patient for this, probably closer to 3 weeks. And again, so a pullback to about 29.20. That's just under the 200-day moving average. 200 days, 29.25. That would potentially be my trigger, actually, if it just falls to that. In about 2-3 weeks, that would be my entry. And then a target was probably still, it looks heavy, around 30.35. All right, so those were the winners this week. ARKG, Biotech, Uranium, and KWEB. Those were the longs. Let's look at the downside. So nat gas, the biggest loser this week, down 9.5%. Let's take a look at this chart. This thing moves up and it moves down. Let's take a look. So this was clearly a top here on the 16th, 8 days ago, when I got to 20, basically 20 even. And now we're at 18. So this, I was saying before, this is a messy chart. Give this like 2 weeks, see what happens. This looks a little bit clearer. I think this starts to descend and consolidate towards 17.35 or so, 17.5, right around there. So not too much more. It has volatile days today, down 70 bips. Like I said, what we were saying before, this 200-day moving average has stabilized and is now starting to curl higher, and it actually is. It's at 15.51. I do expect that to hold on the next pullback. I see like I said, the pullback going to about 17.35, 17.50, right around there. And then that would be the play to get long. Be patient with this on. I would wait for it to bottom around 2-ish weeks or so. Volatility, that got, so again, weren't a ton of losers this week. Nat gas down 9. The next one I had to find was volatility down 4. Today it came in by about 0.5%. We've been calling for the new 52-week lows in VXX. Kind of seems like an imminent thing. Let me look at the chart. To be specific, that level is 40 even. We're at 41.83. I still see this getting descending a little bit. I'm not so sure if we finally get it, but I do see this bleeding out a little bit. Usually when you have the S&P, we had the cash yesterday and today, the ETF, new all-time highs. Typically, you get a little bit of complacency to feed into the market. It's not entirely there yet. We shall see. Like I said, the 52-week low through VXX, split adjusted is July 12th. So this is a world, before Premageddon, before Yenmageddon. So it's meaningful and very telling if we get new VXX lows to, describe the backdrop of the environment. I think it probably happens after the earnings. That's why next week is big. Once you get that, that side of release, the market really can exhale and we start to go higher. You see firms like JP Morgan Chase, all-time highs every day. There's just lots of strength in the market. If you look at the all-time lows list, they're really meaningless areas of the market or very small weight. So it's like the cannabis play, absolutely done, up in smoke, ironic. And then really like Hershey stock is making 52 low. There's not a ton. There's a lot of strength in the market and it's true rotation. And we'll get to that when we talk about the best trades of the year. So for volatility, like I said, see this basing around 41. Maybe it goes under 40 and it gets that finally new 52-week low. I see this a little bit lower, and then probably you will get a mean reversion pop to 45 on some kind of big down 2% NASDAQ day in the future. And then the next one, just down almost as much as volatility, was oil, down 4%. So a nasty week for oil. It had a 52-week high, though, on the 15th. Very impressive. About 84.60 was this name. And then now it's been declining. What do we see ahead for it? I shall tell you. I still don't love it. It's coming off a 52-week high, so I don't want to be too bearish, but this looks like it heads towards, like 79 even. I do think this 200-day moving average holds. It's held for, just since New Year's Eve, essentially. But I do see the 75 handle holding. I see this descent continuing to, easily 79 handle. It could get to, 70, 76 half or so. I wouldn't be shocked. All right. But this has been a stronger name. What a thrust it's had from, December 6th through middle of January, from 70 all the way to 84, almost in a straight line. So that was oil, but one of the worst places to be this week with a 4% decline. So top 3 trades of the week. If you were long biotechs or specifically through the ARKG, congrats. It was the best long this week, up 11.5%. Long uranium right on its tails, up 11.4%. And then behind that, short nat gas, down 9.5%. Now, really, important, this to me confirms, I was talking about this yesterday on the morning show with Steve Strazen and Spencer Israel. You look at the top 3 trades of the past 52 weeks. These are new in this order. And we'll go with number 1. It is IBET up 165% year over year. You got to be in it. 52-week high or all-time highs struck on December 17th. I call it $62. We're currently trading, I'm rounding, basically $60. Bitcoin itself we saw was at 105, 106K, volatile day, executive orders being signed and whatnot. All that being said, so I obviously want to see how it trades this weekend. My target for this, as I said, had been 62. So very, very close to new all-time highs. I want to see what happens, on Monday, obviously this weekend, and see what next week brings. But this could, look at these candles here. It's almost like ponging here, but with an upward bias. That gravity is pulling it higher. Still doesn't tell me that we're done here. I think it could potentially get to about, that's right at its 52 or all-time high rather at 62, and then I do think you'll have a volatile pullback to about 57. So we'll see what happens there. That's almost like 8% or whatever right off the board. So I see a little bit more strength for Bitcoin, and more importantly, I'm trying to zoom out here. As I said, the best ETF performer of the past year is IBIT plus 165. You got to be in it. Here is a new entry that's really shot up due to the some of the decline and the movement we had in SMH and some of the other categories. The second best area to be actually in the market is gold miner juniors. Believe it or not, up 42%. So there are bench players, coming in here, and this is the second best trade in the marketplace. And this group peaked in October, at 55 half essentially, and entered scary times when the Fed cut on December 18th, and it's been spending since December 18th. It's spending all that time basically just up until 3 days ago, and now it's gotten above the 200-day moving average. This one gives me, I was talking about this yesterday as well on the show. it just started to, really recently ascend above 200 moving average, and that was off of these lows, off of 42 to 47. Typically, even with a higher volatile asset like that, I want to give a little bit of a breather. I do not have a position in this right now. I am going to, as I said, the narrative looks like it's being formed. Pick your spots. The next 2 weeks or so look like they're not going to be up and away for the market. I think we're heading a little bit of resistance that's going to be corrected through time, not specifically price. I think things need to be, trading there and then moving with a slightly higher gravity, higher. So for this, I would not chase it here. I would give this about 2.5, 3 weeks, and I would hopefully buy a pullback to about 40. I would love to buy right around the 200 moving average, which is 45.85, and I actually think there's a chance I'll get that shot in 2-3 weeks. So the pen is clicking. So I'm going to do GDXJ long, and I'll just write, like Feb 10 with a little asterisk, and it'll really get me closer. As I get closer to that, I'll know my spidey senses will tingle, and I'll say, this is starting to shape. And I'll probably do, like a debit or a call spread of some kind. I don't love one of the reasons I gave me a pause, but this is the second best trade of the year after Bitcoin. Is just the lower highs here. So I don't know what it did in October, all-time high or 52-week high, and then December lower, and then now here. So it's at a juncture, and I don't think it's going to go much higher than here. So that's the problem, is what I see it going like that at 55, and then 50, and then 47, and then the next one, it's going to be clipping on the 200 moving average. So this is what we're dealing in terms of probability. So going to pick my spots. Want to see how it trades in the next 2-3 weeks. That's the second best trade of the entire year, though. So you got to give a superstar, the benefit of the doubt. And then the next one, I am in this one, the airlines. The third best trade of the entire past year. It's basically a tie with the gold miner juniors. They're down 10 bips today, so pretty much flat. Up 41% year over year. Absolute monster. And the highs for this group just came 2 days ago. I understand what people are going to say. Gold miner juniors and airlines, these aren't, amazing investments. These are trades. Sometimes you need your bench players to come in there. And this was the same day that S&P hit all-time high. So I like the action. Doesn't look like the market's tired. This is clearly just a bench rotating, and things look good, and you should have different pieces on the wheel. This I would not. I said this before, and it continues to go higher. I wouldn't chase jets here. Again, this is a perfect example of consolidating through time, not so specifically price. I think this will get to about 25.85 in about 2 weeks if you're lucky, and that will be your entry with a 27.20 target. So basically to reclaim those 52-week highs, and I think that will be your entry. So pretty crystal clear on that. I would not chase this here. This thing's been really strong, and again, just this is different from the other charts. This has had nothing but at least a 50 RSI trading since mid-August. So this is not just Johnny come lately flavor of the month. This thing has had a very significant ascent since mid to late August, end of summer, $18 all the way to 26. So that's a massive move, almost 50% in just 5 months alone, let alone the 41% over year. Okay. Oh yeah, we have a question. So, hey, can you see Apple? Thank you. Yeah, absolutely. I've heard of it. So here is Apple down 40 bips today. A lot of people wondering. The reason why I was talking about this, if you want to put something in there about what your stance is, I'm guessing you want to go long, but let's see. So this is a superstar in terms of at least where it is just in the index, and it is looking different from the other indices. Hold on. Long, yeah. What? Yeah, long Tesla. I don't know what you're saying there. I see tickers every time, man. I see tickers everywhere. I see dead people. I see ticker people. So yeah, this is the reason. So the 200 moving average is still rising, and that's why I wanted to chase and just buy simple call options the other day. Didn't end up doing it just because of the overall motion of the ocean, as you will, from the overall market. I'm long enough. And these are really starting to roll over. Essentially, I mean, Apple was just nothing but a straight line up. Upgrades, everyone's going to buy the phone this Christmas, yada yada yada, and it basically went up from November, mid-November to the day after Christmas, almost nonstop. And then it's been now doing almost nothing but getting sold from December 26th to now nonstop. So now, what do we think? I think if you get this, so to tell you, I think if you get this under 228, honestly, it's a steal. I think I wouldn't expect huge things in the next day or two. Be aware that these guys do report on Thursday. It could be a nothing burger. It can pop 5%. We'll have to look at the implied move. But, I mean, this thing has not traded under the 200-day moving average since it was a dog in April, May. And then earnings, honestly, was what really changed that picture. It was coming off 52-week low. in April, and then these earnings changed the picture after this report, and then it really started trading above that ever since, and now having overbought conditions. It did technically get oversold on the 21st, 3 days ago. Already bought 224. He writes, beautiful. Yeah. So yeah, the 200 moving average is 218 too. It's pretty rare that you get a sale like that, and that's a pretty cheap way to me to get long beta. So in terms of what forecast and target, I think it's going to have to go against the current in terms of the market. I don't think the market's going to take off. Curious to see what the earnings are for this, but I think you did fine, Gaston. I think this actually heads to 236 to 240 before it gets tired. So I don't know if you're hoping to get back to 260 and everything like that. That's not what I see. I see it getting to about, like I said, 236, 240, and then traffic overhead. So I see basically recouping the losses going back to January 8th to about this level, and that would still be above basically everything it went into going into December. All right, so I hope that was helpful. Goodbye, BUY, and to you all, good BYE, go Birds, EAGLES, Eagles. I can spell it. I'm not the mayor of Philadelphia. All right, peace and have fun.